Alright, what's up traders? This is Taylor with your midweek update for September 14th. Hope the market has been good to you so far this week. But we'll jump in here, guys. I'll make the video short and sweet. I gotta hit the road in a bit. Gotta hit the road, Jack. Got a volleyball game to attend. And then I gotta go get this phone fixed. That's a night in the life. So for the market, pretty big flush there yesterday. The CPI report bent the market over its almighty knee and gave it a little bit of a spanking. So from here, guys, it's basically bounce or die. And what I mean by die is if we break 390, there's just not much technical support, so to say, until we're back down here at the June lows. So it kind of feels like the bulls have no choice but to try to bounce it. Otherwise, you break 390, down goes Frazier. So a pretty good example here of, I think, at least for the time being, keep in mind that in a bear market or in a downtrend, you're going to get some of your biggest bounces. Those big short squeeze rippers. I think the major thing we should, at least keep on the radar is going to be the dollar and HYG. So you guys can see the correlation here where you get 3 or 4 days of a pullback in the dollar. It does your S&Ps and your QQQ a lot of good. They get a nice 3 to 4 day rally. But even though you got that dip here in the dollar, structure remained really bullish. We come down towards the 50, we get the bounce, we got the buy signals with the big 3 indicator. I think as long as the dollar looks bullish, you kind of look at any rally in the market is a little bit suspect, as the kids would say. In other words, you look to short those rallies until the dollar breaks down. So, imagine next week the dollar is under the 50 SMA and there's no buy signals. Right. At that point, maybe we're looking for a bit more upside in the market. Looking for a bit more than that little short squeeze pop. But for now, the dollar looking very bullish. And then for the junk bonds, HYG, kind of the same thing. So 2, 3, 4 days of a pop in HYG does make for a pretty good pop in the market. But as far as the structure, it continues to be really bearish. You got some sell signals. You rally up here. You give the 50 SMA a little French kiss, and right back down we go. So I would think, as long as the HYG here has that bearish structure, any rally in the market probably short-lived. So keep those on your watch list, but that is how I'm viewing the market for now. Bounce or croak. So we got some call credit spreads in, we got them in both rooms. We have them in the Mastery and the options room over at Simpler. October expiration 4100 call credit spreads. So obviously that trade is in pretty good shape. And the other thing I wanted to show you guys here, in terms of the market becoming an easy short, let me grab the moving average bars. So take a look at this. So these bars go from blue to gray when the 21 period EMA is under the 50 SMA. Your negative moving average cross. So the combination of that negative cross and the big 3 sell signal, red label, red arrow, that kind of points towards, your market wants to trend lower. Path of least resistance, very much to the downside. So the QQQ has got the negative cross plus the sell signals, and the S&Ps, the spiders, we're getting pretty close. So to me, just further confirmation, we want to short the rallies here. So that's how I view on the overall market, and though I do think we're going to trade much lower, got a couple setups here for you guys that do look pretty good to the upside. So we'll take a look at Tesla, we'll take a look at the solar sector, and we'll take a look at the energy sector. So for Tesla here, this is pretty much your leadership at this point. So we'll play a quick game of comparison. Tesla obviously looks much better than the S&Ps, the QQQ. Of course, it looks way better than the IWM. Doesn't take too much. Looks better than Microsoft. Looks better than the Zon. Looks a hell of a lot better than Google. That's for sure. Looks better than Apple. Looks better than the semiconductor sector. Pretty much looks better than most of the market. So for now, that's your leadership. Now, bigger picture, if Tesla breaks down, we should expect a pretty big move lower in the market. Okay, the microphone cut out. As I was saying, Tesla breaks down, down goes the market. Right, for now, this is as far as like your big boys, the big fellas. This is pretty much your leadership. So, in the event, we're looking for one more rally here in the S&Ps. Maybe a move back towards 405. My expectation would be Tesla probably leads the way. Just based on the structure here, so we have a brand new low compression daily squeeze. And remember, on the Squeeze Pro, the black dot is your low compression squeeze. We held the dip to the 21 EMA. Always a good thing. And we got some buy signals here on the Big 3 indicator. So today in the options room, here's the thing. Always wait for your first back test. So in the spastic market, we trap the shorts, we squeeze the shorts. Everything pretty quickly finds itself a little bit overbought on your lower time frames. Always wait for your first dip. If you waited for your first dip on the S&Ps, instead of chasing this thing up here, you wouldn't have gotten spanked on that big gap down. So for Tesla, you can see the leadership on the lower time frame. Huge push. First back test towards the hourly 21 EMA. Everything holds up pretty good. So we got that little dip here towards the close. We got the buy signals on the 2-hour and the 1-hour chart. So we took a shot here. So we have got, let's take a peek. We have got the next Friday expiration. What do we do here? Next Friday, 295, 315 call debit spread. So we're looking for a push towards 315 and change, and we got our exit on a close under that daily 21 EMA. So for now, Tesla is king of the hill. And again, I think if the market's actually going to rally a bit, probably looking for a pretty big move here in Tesla. I think at least back towards those highs. So we are on the Tesla train for now. And then as far as the energy sector goes, think back to the charts we just looked at in the S&Ps, the Qs, XLK, the semiconductors. Energy looking a lot better than all of that junk. So we took a shot here today in the Mastery on some October expiration calls. You got your daily squeeze, a staple in a good setup. Daily squeeze, you held yesterday's dip towards that 21 EMA. Not too many things in the market did that. And you've got that positive cross here on the hourly chart. Plus some big 3 buy signals. So for XLE, we got some October expiration 79 strike calls. The exit on this trade will be a close under the 21 EMA. And we're looking for a pushback towards the resistance around $85. So pretty good risk aboard on that bad boy. And if you go through the energy sector, everything's shaping up pretty good. So nice daily squeeze here in ExxonMobil. Chevron looks really good. Got your squeeze and some buy signals. You've got EOG. You've got Devon. There's Fang. There is Chesapeake. Deb, if you're watching this video, I like your call out here in Chesapeake today. So all good looking stuff in energy. We're looking for a push towards 85 as far as XLE goes. So you got Tesla, you got energy, and then last but not least is the solar sector, which you can take a look at through the ETF TAN. So kind of like energy, you got your daily squeeze here, but more importantly, it does a really good job of holding support on yesterday's Bloodbath. So for now, we're looking for that daily squeeze to fire to the upside, taking it up north. So there's a few good-looking things here. You got SPWR, which has been a beast. You have First Solar, which has really been a beast. You have RUN. They're all pretty clean. We have got call debit spreads on ENPH. Beautiful daily squeeze, holding support above that 21 EMA. And on your daily chart, you got the big 3 buy signals with your green arrow. All good looking stuff. So I don't really suggest you buy this one up here. But I do think you could look to take an entry a little closer towards your daily 21 EMA. But pretty much the typical trade for us to the upside. Squeeze plus buy signals plus good looking lower time frames. Looking for a push towards 2 to 3 ATR. exit under that 21 EMA. So for ENPH, the trade that we did in the simpler rooms was the October 7th. 295.315. Ooh, nice. Yeah, 295.315 debit spread, which is awesome because now our short strike is in the money. Good stuff there. So we got that in the rooms, and then on my own, I have got the September 23rd, 295.340. So I needed about another 20 bucks or so to get that short call in the money. But there you have it, guys. Quick video here. I gotta hit the road, handle business, and yeah, looking forward to tomorrow. So for those of you in the mastery, tomorrow we're live at 10:30 a.m. Central. We'll put in a good hour or so of live trading, and then we'll do the same thing on Friday. For those of you not in the mastery, I invite you to check it out. So I'll put the link in the description of this video for the $7 30-day trial. Come on over, and yeah, I kind of think safe to say, probably not going to be a dull few weeks here. And to top it all off, we got the Fed next week, I believe. I believe I can smell Jerome Powell coming. JP and the boys. But alright, guys, hope you found this helpful. Keep an eye on solar, energy, and Tesla. And as far as the market goes here, looking to short the bounces until further notice. Hope you found this helpful. If you haven't already, go on ahead and subscribe, and I will see you tomorrow. Adios.